Now let's move on and talk about the income statement. So in the same way that we were discussing the balance sheet, let's see if anything jumps out at us here on the income statement. Well, we still see that same upward trend, whereas sales are significantly, not quite double what they were in 2013, but significantly higher. And accordingly, cost of goods sold and other expenses are higher. Operating costs, excluding depreciation, are higher. Depreciation and amortization is much higher, almost 10 times what it was in 2013. And so now, as we expected from that decline in retained earnings on the balance sheet, we have negative earnings. So operating income is negative. That's the EBIT, earnings before interest and taxes. Earnings before taxes is negative. And then our taxes end up being negative as a tax credit, giving us negative net income. So now other information that we need to know: number of shares outstanding did not change. We anticipated that because the common equity line item on the balance sheet did not change. But earnings per share went from 88 cents per share to a negative $1.60. So we knew that number was going to be negative since net income was negative. And then DPS, that's dividends per share. So it looks like they cut their dividend in half. And you know, that's kind of interesting, that even though they had negative earnings, they're still paying a dividend even though it's half what they normally pay. And you might want to think about, well, why would a firm continue to pay dividends if it's losing money? Well, you have to think about, and we'll talk about this a little bit later on in more detail, but you have to think about why certain investors invest in certain firms. And for some people, it's because of the dividend. And so if you take away that dividend, then those people would most likely sell the stock. Well, as bad as things are for this company with their negative earnings, they can't afford for a whole lot of people to start selling their stock, because basic economics says that if you have a lot of sales, a lot of selling activity with regard to a stock, it's going to create downward pressure on the price, and it's going to make the price drop. And we're seeing on the stock price line item that the price has already dropped significantly. So if they cut out the dividend altogether, they might have seen their stock price go down even more.